So there are certain unspoken truths out there in the world when it comes to FHA loans. Now, if you don't know what an FHA loan is, it's a mortgage loan that is backed by the federal government. But what a lot of people don't know is an FHA always the best choice for you? Also, what are some other things that you should consider before you sign on the dotted line and take on an FHA to buy a home? The first thing is that you may actually qualify for a conventional loan and not just an FHA. Now, hold on. I know a lot of people think that a conventional loan, you have to put down 20 or 25%. However, that's not true. There's also a conventional program that is a lot cheaper where you are only required to put down between 3 and 3.5%, the same as the FHA. However, there is a cost difference in between the two. The majority of lenders will stick you in an FHA because you will get a higher pre-approval amount versus a conventional, which is a lot more conservative. And the reason why one is more conservative than the other is because of the debt to income ratio standards. One loan will allow a higher debt to income ratio while the other will allow a lower debt to income ratio, therefore fluctuating the amount that you can afford. So for example, with the FHA, you may get approved for 500, but on the side of the conventional, you may only get approved for like 410 or 420. But the conventional route may be the one you want to go because you're spending less money and there are less fees associated. Now, the next thing is that lenders have their own minimum credit scores. Yes, you can get an FHA with a 580 credit score. That's the government's minimum. That's the minimum credit score of what someone has to have for the government to back it. But the lenders have their own minimums based off of their own risk. So lender A may only accept people that have 640s, but lender B may go down to 600. So when it comes to shopping around for a mortgage, these are questions that you should ask each lender, each bank, or each loan originator or loan initiator or mortgage broker before you actually proceed, because it's slightly misleading that you see places, oh, the minimum is 580, but not every lender will approve or take on a client that has a 580 credit score, because the lower the credit score, the more the bank looks at the person as risky, unfortunately. FHA loans have something called mortgage insurance. Mortgage insurance pretty much protects the money just in case there's default. Now, this is one of the expenses that I was referring to when I was saying that FHA is more expensive than conventional. You have to pay this mortgage insurance as a part of your mortgage for the life of the loan. Now, a long time ago, you used to be able to pay only a certain amount of the mortgage insurance, and then at a certain point in time when you reached a certain equity percentage, the mortgage insurance would just drop off. Well, now that mortgage insurance is attached to the loan for the life of the loan. So let's just say if you refinance out of the FHA, then the mortgage insurance premium will go away. However, if you hold on to that loan for 30 years, well, you have to also pay that mortgage insurance, and that mortgage insurance is what will make mortgage payment a lot higher. Normally, depending on the price of the home, the mortgage insurance can be anywhere from 150, 200. It all depends on the several factors, where you live and the price of the home. But that is one thing that can make your monthly payment a lot higher. Now, one of the most important things to pay attention to is your interest rate. Every lender will have a different interest rate. That is the whole point of shopping around for a mortgage. Now, I know a lot of people think that if I go over here and apply for a mortgage and then go over here and apply for a mortgage, I'll have all these inquiries and it will affect my score. However, what you need to understand is when it comes to mortgages, your score will only drop one time as long as you get the inquiries within the same 2 or 3 week time span. And the point of shopping around with multiple lenders, which is something that I tell every buyer that I work with, is to get the lowest interest rate. And despite what these lenders say, they all will have different interest rates because each lending institution and each bank will add more or less interest based on, what today's rates are. Each institution looks to make less or more money than others. It all depends on the institution, which is why you should at least shop around to 1 to 2 independents and also check with your major bank that you bank with. And the last thing is that a lot of sellers do not like accepting offers from government-backed loans. Here's the reason why. A lot of government-backed loans, it's mainly VA, which people like the least, but people also don't like FHA. they have a lot of red tape to them. Normally the red tape is always around the appraisal. For some reason, VA appraisals always come in less, but with FHA, the appraisal is what stops a lot of it. So there are two sides to the appraisal. One, the value of the home, and then the second thing is the appraisal is sort of like a home inspection. Now, yes, you as the buyer will get your own home inspection, but the FHA does a second similar home inspection where they're just looking for safety issues. And I've done several videos on this where if you have, steps in the front of the home and there are no railings, FHA will flag that. That will cost that seller money because then they'll have to put the railing on those steps before that house can close. They can't give you a credit and you do it. No, that has to be fixed and safe and re-inspected before the bank will lend. And it can be something like, if an electrical socket is hanging out, or if you're missing a smoke detector in a certain area of a home. This is what we call red tape. So when it comes to government-backed loans such as FHA, a lot of sellers, especially sellers that are more seasoned, for example, investors. So I just wanted to bring you all several things in reference to FHA loans that you should think about and that you should have in your toolbox as things that you should know moving forward, so that if you do apply for an FHA, you know about these things going into it and you're not going into a blind.